Welcome back, everybody. Sive is here with the ForexPeaceArmy.com. Let's update our view on the gold market. A lot of important things we need to discuss today. So, as usual, we prepared the weekly report where we talked about current market sentiment, what investors are thinking, what they are looking at. And we think that currently is a big mispricing factor is that investors mostly, in majority, expect fast end of this conflict. Where we disagree with this, we think that the terms of this conflict might be significantly longer than investors are thinking about it. Second thing, or better not to say the second, but other things that we considered also have really big importance. We clearly showed why we do not expect any major bearish reversal in the gold in any time soon. So we could accept some sporadic sell-off on the gold due to the demand for liquidity. This is actually the technical issue. We warned about this, that in the crisis moments that might happen. And we talked about this regularly previously, that the demand for liquidity could trigger some sell-off on other assets, including the gold market. We could accept some dropping of the upside pace of the market, and even that it could stand in some sideways performance in a midterm perspective. It's normal for a current situation, but we do not see any factor that could suggest a possible reversal. So also we talked about some factors that are not actually were covered by the media, and you probably do not know about this, but they might be really important and vital for nearest time. So that makes us think that gold market stands on the right way, and you could take now different look on the technical picture based on the fundamental factors, fundamental analysis that we have provided. The technical picture looks quite logical, and the pairing of the weekly grabber stands in a row with the fundamental factors that currently stands on the table, although not all market participants are recognize them. So we think that it is a really important report that we have prepared. As usual, I put the link on the report down in the description. So returning back to the technical picture. Unfortunately, we do not have lots of things to talk about right now. Just take a look on the chart. The last 4 sessions or 3 sessions was inside to the collapse. It brings no information, but at the same time, investors now have got the period weekend where they could sleep with the news, where they could think about it, making some decisions and so on, because it was so high, actually informational attack on investors, some so high degree of the hype, a lot of propaganda in the media right now that they just can't think reasonably. They are just overall flow of with the news, events, features, comments, and so on. So we call you to not pay too much attention to the news right now. You do not get clear information from it. The information that you need, they definitely will be under secret. You will not know about this. So trying to use the common sense and pay attention to some, factors that might be looking like secondary, but particularly they might be really important. By the examples that we have provided in today's weekly report, you understand what I'm talking about. So returning back to the technical picture, I suggest that on Monday morning we could get surprising open, as it might be some contain some investors' conclusions on the current situation. So we will see what will happen. But in the current moment, we do not have, let's say, sufficient context to make the decision on the position taking. Here we have potential grabber that is arguable. It's not quite reliable because I would not have it on the Chicago Mercantile Exchange on the futures chart. It's only on the spot market. Next, we have the sideways standing, and by overall performance, we see that market is not at oversold. Trend remains bearish here, which doesn't exclude the possible another leg down. That's what we have on a daily chart. It's not totally excluded that market could show another leg down. On the 4-time frame chart, for example, I see no problem with this type of the performance. It easily might happen. Reaction on the pearls was not really strong, so it was some upper direction, but it was contracted, it was limited. And that makes me think that here we could still get some continuation. This is not the problems, actually will be even better to us because we will be able to get better price to consider long entry next time. But in the current circumstances, that makes me think that time for a new entry is not ready yet. So we would not have the clear signs of the reversal. Besides, on the hourly chart, have a look. We have same triangle, and we have now inside Gartley steeple to sell pattern. Combination with the first big drop and forming reversal swing, then turning to the triangle, well, moderate reaction on the poor payrolls with this Gartley steeple to sell. It's another reason to not hurry up with the decision making. If even we will get upside breakout and market will form this ABCD action right to the 5250, it will not mean yet that we are in a reversal. It's just will give us Gartley steeple to sell, which suggests some deep retracement down, and market will reshape the continuation pattern from the pennant into the flag. So that might be just tactical short-term performance. It will not break the overall chances on a deep retracement yet. Still, if you somehow have a long position, maybe you're taking it on this retracement that we talked about with this Gartley steeple to pattern or something, you could keep it trying to ride on this possible momentum that maybe market will try to reach this level. For taking a new long position here, it's a bit too late because your risk and reward currently stands almost equal. It's not very attractive. For taking the short position, well, this level seems preferable because here we have agreement resistance and Gartley steeple to pattern. Potentially it's more interesting for taking short position if you would like to. But if the open price on Monday will let you to do this, and you will see that market stands somehow inside of the triangle, you could try to take the position with a relatively tight stop, just to not risk too much. I don't know, maybe somewhere just slightly above the top here. Which this trade will be based on the suggestion that market will remain inside of the triangle, will hold inside of the triangle, and potentially could keep going lower. If the breakout will happen, in this case, it makes no sense to keep it. Better to consider the new entry around this level. But all this stuff is a short term. It's only for intraday trading. The hourly chart maybe on lower time frames. For the taking long position on the high time frames, we still need something better. So some more reliable pattern that we could follow. Currently, this type of the performance suggests that market's a bit uncertain. They have just passed through the initial shock, but now they are a bit in frustration what to do next, what actually is going on. So that explains the overall price behavior here. But hopefully on Monday we still will get some more clarity and see how market will open, and maybe it will suggest some thoughts from the investors, some new plan. So we will see. That's probably enough for me for now. Let's keep watching and see what will happen.